Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great day yesterday. Enjoyed a little bit of markets deciding to take a little bit of a breather, and that's kind of what we're seeing this morning as we're pulling back just a little bit. So, welcome. Glad you're able to make it in this morning. I'm fired up. You're fired up. I hope you are anyway, as it is the 6th of November. We are almost done with election week, it looks like, but then we'll see what happens after that. But you know what? We're going to let the markets do what they do anyway. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts, the updates, all those fun things as we put them out. And I don't know if you guys noticed, but Dwight Traderman made another appearance. I'll put a link to the Dwight Traderman video somewhere in the comments. So, all right, everybody, let's go ahead and get rolling this morning. Starting with the S&P. I'm going to be a little quicker this morning. I'm not going to cover every single market. I'd like to wrap up in about 15 or 20 minutes this morning. We have the boys have what's called Super Friday, and I need to spend some time with the kiddos this morning before they get out the door. So looking at the ES, now overnight we had these two levels in the ES that both hit and price moved away. Now, the first level was a confirmation entry, and we switched it to a confirmation followed by a limit. And the confirmation entry came right through the area, it hit the level and then popped away without truly giving us a good reason for an entry. And then our limit level, our limit entry price, now mind you, it's a 15-minute chart. Our limit entry price came into the zone. We started to get a move away, and then it kind of stalled. So if we, did not get below our stop, remember the stop had to be below here. So 1, 2, 3, 4, 5, 6 candles later, it kind of started to make the move, and then it kind of stalled out. So now, what does that look like price has a better chance of doing? Everybody do me a favor. Type that in the chat window. What does it look like price has a better probability of doing? Remember, when we look at the 6-candle rule, it looks that price has a different movement anticipated. And that's what we would do. Yeah, it looks like it would go lower. When we have the 6-candle rule, it often turns into a breakout opportunity or a shot to go lower. So I'm going to remove this level here. And where do I think we can go? Well, I think it's realistic to believe we can make it down to this area of support, this 34.28. I'm going to look at the levels above us for reversals, but they're not formed really cleanly as of yet. And so we may get basing here, because if we get basing here, then we've got basically clean air to make it down at least 10 points or so, and possibly even more at this level. And then if we reverse back up, it's not formed it cleanly as of yet, but I'm wondering if where we are right now becomes a decent area of supply. So keep that area in mind for today. It's not formed as of yet, though. It's not clean enough yet for me to look at. Next, the NASDAQ. So NASDAQ yesterday, we came into our hourly level and then popped back up above and then came back down into it and then rallied back up above. And so our alert later in the day was just move your stop to break even. And this 12.117, yesterday's price action made this 12.117 a better breakout in the future, right? It made it a better breakout in the future if we get there. And it was because we hovered around that number. Now, we have then come back and our demand level, I mean, that worked for a few points. For those of you that were able to catch that one, I hope you caught a few points from there. It wasn't a great reward to risk scenario on that, obviously. And I was anticipating adding to my position on a breakout. So our trade management on this, for those of you that were looking at the trade updates yesterday, our trade management of this was kind of a unique trade management for that reason, because of that area of supply up above us. So let me pull up the trade updates. So just so you guys know, the trade updates come out throughout the day. NQ entered our demand area and is now basing in front of the possible breakout level. If you took the long, this is a good opportunity to move your stop to break even. I'm not against adding to the position if we continue to base, that should be an S, base below the level. And that's exactly what happened here. We were basing below the level, and then it just kind of, right? So it basically, the trade didn't, I'm not going to say the trade didn't work, but what it did do is it set us up for price to come back lower. It definitely set up for price to come lower. And so now that area of demand acted as supply. I think that you still could take a little breakdown below here. Now, I would be aware of this demand right here. Now, this demand was not formed at a good time of day. It's formed at 8 p.m. Central Time, 8 to 9 p.m. Central Time, which is not really your optimal time of the day for you to look for a trade, but it definitely could stall a breakdown. So I will need very quality basing in order for me to take a short, and it looks like we're getting some decent basing now. I'm okay if you want to take a breakdown below this 11,896. Just be quick to take some money off the table. The Russell yesterday, Russell did not give us the quality basing necessary for a good entry on this level, and we popped right through that area without giving us the quality basing. And so now price is coming back down. Our next area of demand isn't until this 15-minute level down below, which is right in here. We took it below the more obvious market open level. If we rally and pop back up, there's a tiny little wick over wick in here. Let me zoom into that a little bit clearer. That I think is an interesting play. And I think it's an interesting play because of this wick over here to the left. Remember, the wick is like footprints in the snow. It tells me, I don't have to see somebody walking in the snow to know that they did, right? I know that price came back to here and rallied back up. Then we dropped and we based at that level and dropped away again. So that is that becomes more of a fair price value area in the future because we've acted as support there in the past. And now I think there could be, additional sell orders that are added to the queue up in this 1646 by 1647 area. No, Jasmine, 6-candle rule applies to all of our entries. Any entry that we take, the 6-candle rule applies. If it doesn't start making its move inside of 6 candles, I'm out of that position. It is a very, very important rule, which we want to, make sure that we stick to pretty regularly. All right. And then the last one is the Dow Jones. So let's take a look here at the Dow Jones. And when I look at the Dow Jones yesterday, we had a little bit of basing in front of our level. We popped up right to the area of supply, and then we came right back down. Now, this looks like a small little move between the basing and this area up here. Well, that's 150 Dow points. The thing we got to remember is our ranges have gotten so much bigger. That's still 150 Dow points. So we rallied up into here. We came back down. We rallied up. We came back down. That's the classic sign of a topping pattern, right? Now, what does that do for us? A couple of things. First of all, that supply level obviously has been used up, but it creates a breakout trade up above here. Okay, it creates a potential for a breakout trade up above there, very similar to the one that we have in the NASDAQ, and then basing for a breakdown below 28,000. All right. So, any questions on those equity markets, let me know, and I will put those in there. Jersey Trader says, you call out so many zones, I got confused on the YM I wish to take. Also, where do you set your stops is based on 2% of ATR below the distal. Awesome question on where to place my stops. I do not place my stops at 2% of the ATR below the distal. Matter of fact, I think that that's a flawed logic in how to place stops, and I'm not knocking you. But a lot of times, if you place it at 2% of the daily ATR below the distal line, that means you're assuming the market cares about the daily ATR and it cares about the percentage, and they don't. The market only cares about orders. So we place our stops outside of the pivot areas or of the wick of the leg-in candle. If you want to see, if you go to the website underneath Traders Army, if you go underneath Advanced Price Study, there is a lesson underneath Advanced Price Study specifically on setting stops and targets. So it is stop loss and target placement. So watch that, and we go through exactly what to say, what to look at for where to place the stops. I don't have time to dive into it today, but yeah. Yeah, you don't need a big stop, but you do need to be outside of the wicks of those other areas. So let me share this grid here real quick. All right. Next, let's move over to energies and metals. put these in here real quick. Okay. So looking here at our crude oil market. So crude oil yesterday, we just hovered back around this breakout area, and we then gave it a little pop above. We did give it a little pop above. This is, usually I say I look at something whether it's a true breakout or a false breakout, and this one did give us a breakout and then completely went the other way. Now our stop would be below this pivot, so we did get, it was very quick, unfortunately. I think the level's still good going forward. We just got a little bit of a touch inside of it. Now overnight we hit the 15-minute level, and we came up out of that zone pretty well. But now on the 4-hour, what does it tell me? Well, the 4-hour, that's a bit of a pullback on the 4-hour, a bit of a rolling. What I'm going to do is look above to see where's a chance for us to get a reversal. Well, because that 15-minute demand level, it held for a little bit, but because that 15-minute demand level didn't give us a big move or a new high, I think that's going to show additional weakness. We're actually putting in a little bit of a tweezer top almost right in here, and this candle's just about ready to print. If you wanted to go short just below this this candle's low with a stop above these wicks, that actually may not be a bad trade. It's a pretty good little setup. It's a little lower probability because it's candle to candle on a 15-minute, but it's not a bad trade. Aside from that, you've got this area right up here. All right, gold. Gold yesterday popped into our supply level. We did get a decent little move away from that area of supply. We've now come up above that area of supply. So whenever we come back up above it, now we need to look to see where can price go. Somebody asked me yesterday if I think gold could go to 2,000. Sure, gold can go to 2,000, right? It's just going to need the right amount of buyers in order to propel it higher. Well, when I look at this on a daily chart, we're sitting in an area of supply. That supply area, though, was not the greatest of supply areas. And so now if I look a bit lower to a reversal area for demand, this would be a great level. And the reason this is a great level right here, it's a little wick over wick above a pivot low, but that pivot low was able to thrust us to a high above this prior swing high. That's what makes this a great level. The fact that this move was able to get us above this pivot high, and getting above that pivot high was the move in there. All right. Nat gas is actually sitting right above its breakout level. I'm going to just pop through that one real quick so you guys have seen those lines before. And then copper yesterday, we didn't get the cleanest of basing in here. We popped above it earlier in the day without basing, and then we came back down, and then we popped around it, and then overnight we shot back up through it. Neither one of those levels really were picture perfect for an entry, and then this definitely went through our confirmation. So now we're looking up in here. Well, on a 4-hour, what does my trend look like? On a 4-hour, I've got an upward trend. So my supply level above me has to be confirmation. My demand level below me would be on a pullback to a quality level. And this is the quality level on the demand level right here. That's actually a really nice, clean area that showed its pretty head. Okay, so that's the area that I like on there. Let's see, gold supply zone. What do you got there? 1954 by 1963 on the 4-hour. So I don't see a gold supply level at 1954 by 1963. So you're taking this area up here. Yes, very, very clean supply area, no doubt. But we've already hit it once and moved away, and now we're basing in front of the level. So yes, I agree that is a supply level. I just don't agree that it's a high quality enough supply level for me to be willing to take a short on, since we've already hit it once, didn't get a strong move away, and now we're basing in front of the level. Does that make sense, Jersey Trader? All right. So I'm going to zoom in on these, do a quick grid share. All right, let me move over to our agricultural market. Looking at our ags this morning. My mouse, my cursor. There it is. Soy, not a whole lot to add from yesterday. We are sitting actually at what looks to be a potential for a breakout trade, but it's just gone very sideways here. So just keep an eye out for a potential breakout from this triangle pattern. I mean, this is a symmetrical triangle pattern that's pinching through here. I don't normally take the trade on the pattern, breakout of the pattern. I want to take it on some quality basing above a high, and that would be probably somewhere up above here. It'd be okay. Now, corn yesterday hit our supply level and worked like a charm moving away from here. It was a very nice trade, a very nice move away. And so that one worked out really well. And now I think you could get a basing before here for a breakdown to come down to the next level. Wheat yesterday, whereas corn worked out really well, wheat, not so much, huh? As we came back down through this level, it was a little stop out before then popping back up. Now it's just kind of going sideways, so there's really nothing I'm going to add to this level today. I've got a little supply here, but I don't think that's a quality enough wick over wick, and overall we're still too sideways. And then bean oil yesterday continued its move up. This was off of our Wednesday area of demand. We talked yesterday in our live trade room about moving your stop up to here as we have started to stall a little bit. But I think it could continue the move higher if we get above this 35.56. Maybe look to add to a position if we get basing in front of this 55.56, if it still happens to be one that you're still in. Don't hit the on-demand button, you big dummy. All right, let me share this one. All right. Now, I'm running a little bit short on time this morning. So does anybody have a specific currency they want me to take a look at? If you do, type it in the chat box now or forever hold your peace, because I don't have time to look through all of them. I just wanted to at least get the specific one that you might want to take a look at this morning. If I just kind of pop through, I'm not really close to anything on these markets from our prior levels. And then if I pop into these ones up here, looking at these, the Great British Pound is nowhere near its level that we were looking at, although I could see a breakout above this 31.59 here on the BP. That would be the one that I would think is the most probable for the breakout. Your reversal actually now, the probability on your reversal is moved up to here on the Great British Pound. I'll leave that one in. Japanese yen. Looking there at the yen, we've continued to move higher. 4-hour chart is above this area of resistance that we had here. So we've gotten above that area of resistance. Our next stop would be way in these levels up in here. So on some sort of a pullback, none of these are quality areas of demand. I just don't know that I would trade any of these on the yen. I'd need a deeper pullback for me to get long on the yen. Australian dollar, we've come into our area of supply, which is a confirmation short, came out of it, and then did nothing. So that tells me that, yes, confirmation short just didn't go anywhere. It didn't cost you anything because you shouldn't have had your stop that should be moved to break even after 6 candles. But this is another picture where we have a little bit of supply here, a little bit of demand here that was a former area of resistance where you could see a little reversal right in here. I'm going to just remove this level there because we're basing in front of it. All right. And then the New Zealand dollar, we popped above. We just didn't really do a whole lot. We're still kind of, we're looking double topish right now on the New Zealand dollar for a potential pullback below here. All right. And then somebody asked me about the Mexican peso, which I don't look at the Mexican peso all that often. But just in quick first glance, my eyes go to a breakout above those highs and a potential pullback. There's no clean pullback levels until we get all the way down to here. I don't love that. I don't love that. I don't love that. That I like much better. All right. So that's what I have for y'all this morning. I'll put the Great British Pound back up. I'm going to share this grid here real quick. Now, real quick, before I log off, as I'm sharing the grid, one thing I want to make note: this weekend it looks like we're coming to a conclusion to the U.S. vote counting, and the U.S. vote counting looks, whether you agree or disagree, I don't care, but the U.S. vote counting looks like it's coming to a head, as in the last few hours, Joe Biden came ahead in Georgia as well. And so since he came ahead in Georgia as well, it looks like there's a very slim path to the presidency for President Trump, and it looks like it may settle out. But also what can happen over the weekend. And I'm not being political, I'm just stating what I just saw a few minutes ago. Right? What can happen over the weekend? Can anybody tell me? When we think about the markets overall, when we see this, we can have huge gaps over this weekend. So I cannot state this more plainly. If you don't know how to hedge your futures positions over the weekend, utilizing options on futures or some other way, do not hold futures positions over a weekend. It is just an asinine thing to do. Get out on Friday, get back in Sunday night. It costs you $5 to get out and back in, but it saves you the peace of mind, right? If it doesn't gap and you get out Friday and you get back in Sunday, oh well, you cost yourself the commission. But if you don't get out, I guarantee you will kick yourself, right? And you say, well, Chuck, what if it gaps in my direction? Good luck, right? I am not willing to play that chance. So I cannot stress this plainly enough. Please preserve your capital. If you don't know how to use options on futures, we've got a course on the site. Go to Traders Army, and you will see the course on the site that can help you to get there. So if you guys have any questions, as always, let me know. Until next time, everybody, I appreciate you. I will talk to you all soon, and I will see ya.